Hey guys, Freddie Crespo, broker, owner of Investors Real Estate, coming to you May 8th, 2025 with an incredible market update. And let me tell you, this market update is no joke. What? The things that I've been talking about before, like for instance, that real estate tends to do 90% of the time, it tends to do what it did the year before. So keep that in mind as I go through this. So let's start off with the median sales and where we're headed. I'm just going to tell you right now where we're headed. We're headed for the crash, okay? The crash is going to happen. I've been predicting it for 2027. I know no one out there is giving you dates. They all say, oh, it's coming, it's going to crash, it's going to crash. Yeah, no kidding. Eventually it's going to crash. 2027, and that's based on history, based on supply and demand, right? So if that demand goes down and the supply goes up and we get overbuilt, then a crisis hits, and then we're in foreclosures and the recession and the crash. With that in mind, let's go into the median sale prices in Orlando. We're gonna look at inventory in the whole United States. We're gonna touch on unemployment, and I'm gonna tell you exactly where you're at, and then you can govern yourself accordingly. Here we go. Here we are. These are median sale prices in Orlando, Florida, okay? Now, the green line right here, the teal line, is 2022. Now, if you know what was going on in 22, we had those low rates, right? 3% rates, 4% rates, and then they raised the rates, the mortgage interest rates, and that's when things really started slowing down. If you look at the peak of this teal line, this is 2022. The peak of that year, we have this huge bubble, and I talked about it in my other videos, so check those out. And I explained how this bubble was so big that next year we probably could break through the bubble, but we would continue to go up because the inventory was low. In May, which is about where we are at today, right? That was May 23rd through June 19th. It peaked out at $399 in 2022. This is median sale price, right? 24% year over year from 2021. That's a crazy jump. Now, 90% of the time, real estate tends to do what it did the year before, so we would see another 20% jump. But listen, prior to that, we saw 18%, 20% jumps. Now, it didn't happen. In 2023, we didn't have an 18% jump. We had a 2% jump. Why? Because the interest rates rose, the demand got squashed, inventory started to go up. 90% of the time, it does the same thing. 10% it doesn't do the same thing. It did not do the same thing the next year. It did go up, but not by that much. It only went up by 2%. So now apply that again. 90% of the time, it does the same thing. Well, it jumped up here 1% to 2024. So the red line is 2023. The orange line is 2024. We're still year over year. Prices are up in Orlando, okay? This blue line right here is where we are today, 2025. And we see for the first time us breaking under that line. That means we are down 1% year over year. We see it for the first time, but then we broke out the other end. And as of right now, through May 4th, we're 1% above last year. So what's going to happen with this blue line? Most likely, I predict it's going to come across this way. I think we are going to get a rate cut because the government has to refinance their $8 trillion in June. So most likely, the Fed will come to the rescue. We'll see if he drops the rates in June. And we might see a little spike here. And we might end up 1% above at the end of the year. Or zero, will end up at exactly $407,000 median sale price. By the way, the year before, I had predicted in 2023, early 2023, that we'd end up at $400,000 median sale price at the end of the year. And my prediction is this line's going to come through here. It's not going to go down like this because there's still no inventory. It's going to come out over here somewhere. This whole thing's a bubble, so it's probably going to exit right around here and end up here around that $400,000 mark at the end of the year. Now, there it is, $400,000 on the nose. All right, then we did 407. So I'm thinking anywhere from 407 to 410,000 is where I think we'll end up. If we do end up 1% down year over year, boy, that's a really big sign that we are headed into the next peak, inevitably the next crash. So I will talk more about that in a second. If we do end up 1% short, you're going to be looking at around 402,000. So those are your ranges. I'm thinking we're still going to end up either equal or to about 410. So we'll keep an eye on this blue line. Now what I want to do is I want to show you what the whole nation is doing, because the whole nation is involved in this, okay? We typically, to have a normal average market, you need to have about 2 million homes on the market active, okay? So look, this is 2022. Look how much higher we went. From 2022, we went from 651,000, then we jumped up to 765,000. Then we jumped up to 927,000 homes on the market in the United States. Then today, 2025, we've got 1,072,000. So you can see the pattern, okay? But we're still 1 million homes under before we can get anywhere near the peak and crashing, really. Crashing is what I'm looking at, not necessarily at peak. I believe we're pretty close to the peak. We're very, very, very close, or we are at the peak, okay? But we're still underbuilt overall. It's just not extreme. Okay, so that's the United States. Let's go to median sale prices in the United States. So you can see the 2000 bubble. It's very similar to Florida, right? To Orlando. You can see in 2023, it broke through that bubble, like I said, that it might, and then it comes out the other side, but we're still year over year above. Everything is the same. Then it went up 6%. This is nationwide from 2023 to 2024. And now today we are up 2% nationwide year over year from 2024. So you can see this line. It might continue to go over, or we might see this line break under here, just like we did in Orlando, and come out the other side. We'll end up over here about, in this case, since we were up 6%, look, we went from 4%, 6%, I'm thinking maybe 3% above at the end of the year. So the median sale price in the United States is $383,000. All right, now let's go back to Orlando, because I should have shown you the active inventory. Now in Orlando, the crash number for me, in my opinion, is after we hit over 30,000 homes in Orlando Regional, that's when we know that it's over. It's over. All you need is a crisis to hit and it's done. Unemployment to go up and it's done. Now let me show you. We're going to get into unemployment in a second. Okay, this is Orlando Regional active, same thing, active listings. We're going to go back to 2022 where you had 5,000 homes on the market. Take a look at that. Then next year, I'm going to try to keep it straight with this line. We're just going to line this up. Okay, 5,000 homes, then 8,000 homes. I'm just rounding up, rounding down. 12,000 homes, and today, 15,000 homes on the market. So we're halfway to where I believe is going to be that crucial zone. Now remember, in 2007, the last peak, we had 26,000 homes on the market in Orlando Regional. I'm being very conservative, so if we get over 30, we know we're in trouble. I mean, anywhere in the 20s we're in trouble. Right now we're 15,000. We're headed in that direction, so let's keep an eye out on that. All right, now last thing I want to touch on, I don't want to make this video too long, is unemployment. Let's take a look at unemployment, because this is interesting. Typically, unemployment lags a little bit behind the numbers, or the crash, for instance. Let's go back to 2007. So if you can see here on the chart, that's 2005 was a big year in real estate. Unemployment was at 5%. It was a great year. 2006 was a great year in real estate. Prices were going up. The unemployment started to go down a little bit, 4.7, 4.6. You can see at the end of the year of 2006, we were at 4.4, and I'm right here, guys, 4.4 at the end of 2006, unemployment. Then 2007 is where everything changed. Midway through 2007, you can feel the market shifted big time, and that was it. We had peaked out in 2007. Unemployment was at 4.5 in 2007. So keep looking. Look at this. Unemployment starts to go up in January of 2008. It jumps up to 5%, or December of 2007, 5% unemployment, and then it starts to soar, right? That's the crash, foreclosures, and all that good stuff, right? All that bad stuff. Up to about 10% unemployment. Okay, this is COVID, obviously, that huge spike. Let's go to, we'll do a little bit of 2022, 2023, 3.5, 3.6, very healthy unemployment. Now we're going to 2024, we're at 3.7, 3.9. Look, we're in the fours now. In 2024, we're in the fours. And as of today, April 2025, we're at 4.2. Okay, 4.2. Remember that the peak in 2027, let's go back. 2007 was, and I would say midway, July 2007 was 4.7. Today, we're at 4.2. Unemployment, keep an eye on that, because that's going to continue to go up, or it's going to go up by the time we get to 2027. So that's what I'm thinking is going to happen. You can clearly see in the active listings, when you go from 5 to 8 to 12 to 15, it just keeps happening, going higher and higher. If you are an investor and you plan on not holding through the next cycle in real estate, you may want to get out now. If we're not at the peak, we're pretty darn close to the peak. We're 1 to 2% away from the peak. There's no sense in risking this inventory going up and up and up when we're only selling about 2,500 homes every month. That means an additional 12,500 homes remain on the market. And in order for you to sell, if you're one of those homes, you have to reduce your price. And that's why we're seeing lots of price reductions. I'll have to show you all of that data in the next video, because I think we've gone too long. And you guys have seen my other videos about the 17 to 18 years. Peak of the market, 1989. I can even go further back, 1966, peak of the market. Peak of the market, 1989. 89 to 2007, 18 years, peak of the market. 2007, 2025 today, 18 years. The only reason we don't peak out here and crash is because we don't have enough inventory, because the builders started late in 2016. It takes them about 10 years to catch up to population growth, and COVID hit in 2020. We had a huge problem with materials, and buildings stopped for a while, and so we had another delay. So 2027 is still my target, and hey, let me know what you think in the comments, and let's see how things pan out. Okay, so God bless all of you, and take care. Bye-bye.
Not just a home, it's an investment.
Investors Real Estate, LLC.